after the company issued a warning about its 2024 outlook. That weaker than expected guidance weighing on shares just a bit. It's coming off of a mixed report here, and it's just one of several of the big tech reports that we got not only this week, but looking ahead to some of the big tech giants that are going to be reporting over the next trading week. So our 2024 forecast a bit ambitious. We want to bring in Brian Jacobsen. He's Annex Wealth Management's chief economist and strategist to tell us more. It's great to have you here, Brian. So when you take into account the warning almost that we're getting here from Intel, clearly having an impact on some of its rivals this morning in early trading, what do you think that signals then for the rest of this earnings season?
Yeah, it's an interesting earnings season. And if you actually look at analyst expectations coming in, it was a somewhat low bar that was set for the fourth quarter earnings. What I'm a little bit more concerned about, and we here at Annex on our investment committee are concerned about, is the full calendar year 2024 earnings picture. So this time, it's like it was a low bar to somewhat clear. Some are doing it. Some are tripping over that low bar, unfortunately, as you are seeing. It's more or less what's going on with the longer term picture here for 2024. If the consensus is calling for 11 to 12% earnings growth, that seems a little bit aggressive to us here.
What are your clients asking you right now as they're trying to monitor some of these margins that are coming in this earnings season so far and trying to best position their portfolio for that longer term, for that outlook, for the full year that you're trying to point the attention to?
Yeah, really last year, if you kind of think about the economic numbers, one of the key words that was oftentimes used to describe the economy was resilience. Mm-hmm. And I think that investors right now are looking for resilient profit growth for 2024 and beyond. So I think that resilience theme is really important. What we oftentimes try to do, though, is not just look at what are profits, but what's the trend for them. And for that, you look at the Magnificent Seven. I mean, a lot of these are real cash cows, right? But they could turn into a messy seven instead, as we've already seen with Tesla, and we'll have to see what happens then with Microsoft and with Apple as well. So it's gone from magnificent to kind of messy. And really where we're finding more opportunities is moving down capitalization. So instead of like the top names in tech, think about more the second tier ones instead, where maybe the valuations are a little bit more attractive and they still do have that resilient profit profile.
Brian, we certainly have seen the expectations for the Fed to cut rates as one of the big drivers here of the recent market gains. When it comes to that PCE print that we got out this morning, the fact that it was a little bit better than anticipated, do you think that keeps the discussion about a potential March rate cut? Is that still on the table?
No, to be perfectly honest, I think that the odds of a March rate cut are effectively zero, mainly because if you look at the data that we've had, inflation is heading in the right direction and growth has stayed rather stubbornly high. Now, what that means is the Fed doesn't have to be in a rush to cut. So absent some sort of additional crisis or something that could emerge, you never know. I mean, that's almost kind of by definition what a crisis would be. It would be a news event, right? It would be new information. The Fed doesn't have to be in a hurry to cut. And I think a lot of people are thinking that for inflation to come lower, we're going to see more material slowing of the economy. But that doesn't really seem to be happening. And so really for us, they might taper their quantitative tightening and then take the next step, which would be a rate cut. But that might be more of a June story.
Brian, thanks so much for joining us here this morning, breaking down all things that investors should keep on their radar as they're monitoring some of the machinations in the economy as well as for their own portfolio. Brian Jacobsen, Annex Wealth Management Chief Economist and Strategist. Thank you.